Okay, so as we all know, my name is Raquel, as you guys already know. So today we'll be talking about institutional order flow. So we'll be talking about institutional order flow, order blocks, and then breaker blocks. So we have either bearish order flow or bullish order flow. So bearish order flow is basically the last buying move before the sell. So let me quickly go into the lower time. So if let's say we find a clean uptrend, normally I'll see a clean uptrend like so. If we find a clean uptrend like this, right? So here we will see something like what a bearish order flow. So a bearish order flow is basically the last selling move before the buy. So these are the bearish order flow, the last before the buy, right? And then here will also be the last selling before the buy, right? So the last selling and then a break of structure, then the last selling and a break of structure. So this is one simple strategy some people also use in the market. So let me move on here again to the last selling move on the buy again. Right. So basically, if market is moving based on market normally moves based on the order flows. So market will sell before start. If it's a bearish if it's in a bullish market, there will be a bearish order flow. So market will sell before buying. And then before market will continue the trend, right? After breaking structure, it will make sure it will come and then retest on the order flow before what? Moving to, let's say, if bullish in the bullish direction, right? On the last class, we spoke about the break of structure and then change of character and the rest. So here, for example, right, it broke the structure, came to retest on the last order flow before what? Going up again. And then here also, it also broke the structure, right? And then came to retest on the order flow before going up again, right? And here also, I don't see this as a break of it, but I'm just teaching as an example. So let me just like this, and then what? It has come to do what? A test before it wants to also move up again. So basically, this is how the order flow is. So if market is moving in this way, okay, boss, you want to ask question? Currently, you are the only one in the class. I will not upload this video.
Yeah, please. So does it mean say like the order flow no
Yeah.
it consists of series of red rectangle circle the order flow. No?
You say it consists of.
You debate my question.
I don't understand. I don't understand it.
Yeah, the order flow. No?
Yeah.
Does it consist of like series of?
No, it won't only if let's say bearish order flow won't only have.
As you take the this in the rectangle.
Yeah.
You take the rectangle and so the order flow need be plenty candlesticks where they make the order flow.
Yeah, if sometimes the order flow can even be one candlestick, depending on the movement. Maybe there can be one long candlestick before the buys will start, right? And that will also be an order flow.
Okay.
You understand? So
Oh,
if
okay. Okay.
one long sell candlestick
Yeah.
before the buys is still an order flow.
Okay.
Yeah. So if market is moving like this, let me in a downtrend like this, then like this. So we will see this as an order flow. This last buying move before the sell as an order flow. And then you also see this last buying move before the sell as an order flow. So mean the market will definitely come and then do what? Retest it before continuing the direction. Then this will also be an order flow. Right? And then if it's also moving like this, so in this instance, we'll be getting what? Bearish order flow, meaning we are in a bullish trend. So bearish order flow. So market will need to come in and retest it. Right. And then here to market. So if market will continue pushing higher, it will need to come. This will also be order flow. Market will need to come test and then go. So you see, normally you see people setups on Instagram or online, and then they will be like, market will come, and then they are trading based on order flows. Maybe I'm sure you've been seeing some setups. So sometimes when I see some setups, you'll be looking at it in a clean way. Like you see, normally when they put the setups in line like this, it is clean. But when you see in a chart form, like candlestick, you'll be confused. So basically, these are the order flows, and then the order flows are the parents of order blocks. So the order flows are how will I be say? They are the flows
Yeah.
that give birth to order blocks. So you see that in the order flows, there is definitely order blocks. That market will come and then retest. So that will be what? A refined order flow. So the refined order flows are the order blocks. So the refined order flows are the order blocks. So the refined order flows are the order blocks. So normally, this is how order blocks comes about. So you see, the order blocks are created by the institutions. Even though say we don't know how they trade, but according to how the market moves, this is how we've been able to analyze how order blocks comes about. So what they do is, if let's say market is moving in an uptrend, right? For example, this. No, let me say market is moving in a downtrend. For example, this. Right? And then they want to sell this market. They want to sell this market. What they do is, you see market is in a downtrend already, and they still want to sell this market. When they sell straight, they know that we will see the direction, and then we will enter, and then we will follow them. They will be making profit, but they don't want us to make profit. So this is what they will do. They will first bring up a bullish candle. So what they do is, maybe they will place an order of, let's say, 20 million. So they will place an order of, let's say, 20 million in a buy, right? To induce us that the market wants to buy. So what they do is this. So we will be thinking that the market wants to buy. Oh, then say buy here, right? So they'll know that when we see the buy, everyone say, if let's say this is 1 hour time frame, right? And you see this in the lower time frame, you'll be thinking that market is what? Buying. So that's what they will do. And then boom, you see them place another order of, let's say, $200 million. So they'll first place a buy order of, let's say, $20 million, and then they will hedge against it like 2 million. They'll hedge against it like $2 million. So now, let me clear this one. So they'll first what? Place a buy order like 20 million, and then now they'll place another order of 200 million, right? So when they do that, so they place a buy of 120 million. They've placed a buy of 20 million, right? And then now they've placed a sell of 200 million. What do we see? What are we seeing? Are we not seeing another block? Hello? Hello?
Yeah.
Okay. The network article. Otibua. Otibua. Are you online now? Network key. So this is it. So after placing the buy order, right, they'll place a sell order of, let's say, 200 million, and then the thing will do what? Hedge against. So you see that market will be going in the sell. So now they'll be making profit. and then maybe they will take TP around this side, right? So when they take TP, they will take the 200 million hedge that they used. So now they will take their money with profit, but they will be leaving that 20 million to run, and that 20 million was what? A buy. So that's when market will do what? Will come all the way back up again to come and then what? Retest. Yes, it will form something like either change of character or a break of structure, one of them. And the market will do what? Come and then what? Retest on the other block again. And then they will now be able to take that their 20 million that is set to the buy. They will take off that 20 million again. And then now what? The market will be viable for a big sell. And then now they do what? They'll enter again with a sell, say boom. So this is normally what the institutions do. First of all, if they want to move the market, so first of all, they do what? They buy first. If let's say it's a selling, a bearish movement, they buy first before they sell big to create the order block, and then they will come and then what? Retest on it, and then boom, fall again. So we can be seeing this in the market. We can see this in the market. So let me quickly clear this, and then let's look at it here. Let's look at it here. So see it from here. Before market will start the buying movement, what do we see? We saw what? A series of sells before the buys started, right? Before this market will start this buying movement, we saw a series of what? A sell before the buys. So that's what they have been doing. So you'll be seeing that before these buys will start, right? You see a series of sell. So the series of sells is the orders that they placed before this buying movement. So here, for example, let me see. Let me look for a bearish market. So even from here, they placed a series of sell before this buying movement. So after they did that, they need to what? Come all the way to come and then retest on it. But they didn't retest straight from the order flow. They came to retest on the order block. So most retail traders trade based on order flows. That's why they have big stop losses. But smart man traders normally trade on order blocks. So normally the stop losses are small. You see, if somebody is trading on this order flow, for example, on this order flow, if somebody is trading on this order flow, right, he or she will be having some stop loss of, let's say, 70 to, let's say, 80 pips, right? So 80 pips, 80 pips stop loss, 80 pips. But if somebody is using SMC, smart money concept, to trade, right, the person will be trading based on this order block. The person will be trading on this order block, and then your stop loss will rather be, instead of that 70 pips, your stop loss will be what? 20 pips. So you see, you've been able to refine it to reduce your risk. Like you've reduced your risk. So basically, that's it in the SMC concept, using the SMC concept to trade. So as I've spoken about the order flow, the order block, right? Order flow and then the order block. So basically, when I invert this one, let me invert this chart. So here I'll rather be sell. So this is what they will do. They will first sell before they buy, and they will come all the way to do what? Tap it before they will start the movement. So basically, this is the same thing here. This is the same thing here. Do we understand up to this point? Do we understand up to this point? Hello?
Yeah.
Okay.
So let me see. You are saying the red candle is the
Yeah,
other block,
sure.
right?
You said the red?
The red candle there is your other block.
Yes.
Yeah, so market makers will place in a sell, and then when it gets there, for okay, I understand the concept, but then probably
Yeah,
articulating it might be a problem.
I get it.
But then yeah, I do understand the concept.
So I mean that if they want to what buy the market, what they will do first is they will sell. So if let's say it's 1 hour order block, you will see in the smaller time frame, you'll be seeing that okay, market is selling. So let me also enter a sell. Then because you see if in 1 hour the market is selling, then in 1 minute it will be selling big. So you'll be induced to go and sell if you are trading with 1 minute time frame. So you see that okay, let me enter the sell. Then you see boom. So this is when the market will be forming like something like a wedge. So if the market makers, this is what they will do. You see the market will be forming a wedge like this. Market will be forming. So market will be forming a wedge. This is lower. So market will be forming a wedge like this. So they call this what? A falling wedge. So now what market will do here will be like this. Then boom, it will break above this wedge. I hope you know this wedging concept.
Yeah.
So basically, this is it. So if this is 1 hour time, this is what will be happening in, let's say, 5 minutes or 1 minute, like this. Before this buying will come in, boom. So you know, some people even trade based on only this strategy. They trade on it, but they don't understand how the thing even came about or how it's even working. They just, when they are seeing a falling wedge, so you can be seeing it in the market also. So yeah, I'm coming. You can be seeing it somewhere here like this. You see, market was moving perfectly like this. And then what did it do? Break, retest, boom. You see, break, retest, boom. You see what happened? So this is a normal. So when you go into, let's say, 1 hour time frame, look at what it did. You see 1 hour time frame, it was just something small. When you go 4 hours, where is it? 4 hour and put there, it was just one candlestick. Then boom. So you see what they do. So for example, this sell, for example, when you go into a lower time frame, you'll be seeing that it is like this same one. And then boom, this buy came in. So that's what the market makers normally do. Do we have any questions up to this point? Is there any question?
Please, can you go over the refined order flows again for me?
The refined order flows. Okay, I'm left with 4 minutes here, but let me quickly do this. So I was like, the refined order flow is the order block. So these are the order flows. Oh, okay. So I was like, if you want a bearish order flow, so if let's say market is moving in an uptrend like this, right? It's always retest on an order flow before moving. So for example, this is a bullish trend. So it will be like this. The last move, the last selling move before the buy is the bearish order flow, right? And then here too, this last selling move before this buy is the bearish order flow, right? And I said with the refined order flow, it means that what you are looking for an order block in the order flow. So for example, this order flow has an order block here, right? And then this one also has another block here. Right. So that's the refined order flow I'm talking about. Do you get it?
Yeah, okay, I get it. I get it.
Sharp. So the Zoom will end very soon. Let's come back again and then let me talk more about the order block and then we'll be done for the day.